$20.6 billion US dollars.
Wow.
That's the projected size of a global market in 2025. Think about that for a second. What could be that big?
Right.
Well, we're about to take a deep dive into something you might not think about every day. The world of oil gas static rotating equipment.
Sounds technical?
It does sound technical, but stick with us. It's surprisingly crucial.
Oh, it really is. It's basically the engine room of the oil and gas industry.
Right.
When we talk about this equipment, we're looking at, well, two main categories. First, static equipment, things like boilers, heat exchangers.
The big stuff that doesn't move much.
Exactly. Shell and tube types, air-cooled ones, and critically, valves. Valves are so important for controlling flow, pressure, everything, really.
Okay.
Then you have the rotating equipment. These are the workhorses. Compressors, turbines, pumps, they're vital at, every single stage, from finding the stuff to refining it.
Got it. Exploration to refining. And this isn't some niche sector that's winding down, is it?
Not at all. Quite the opposite.
Our source today, it's a 2025 global market report, and it forecasts pretty significant growth. We're expecting this market to hit nearly, USD 31 billion by 2033.
That's right. Almost 31 billion.
Growing at a healthy clip, too, a compound annual growth rate, or CAGR, of 5.2%.
5.2%. Solid growth.
So our mission today is really to unpack this report for you. We want to understand the current landscape, where this massive market is headed.
What's driving it?
Yeah, what's driving that growth, and, which parts of the world are seeing the most action. Consider this your shortcut to getting a solid handle on this vital, if maybe a bit behind-the-scenes industry.
Exactly. Our goal is to go beyond just the headline numbers in this 2025 report. We want to give some context, some understanding around that current market size,
Right.
the expected growth path, and importantly, the key factors shaping it all. And we'll definitely be looking at how different regions globally fit into the picture.
Okay, let's kick things off then with the big picture, that global overview.
Yeah.
As we said, 2025, it's a hefty USD 20,641.5 million.
Over 20.5 billion.
And that 5.20% annual growth rate means we're looking at a really substantial increase, getting close to USD 31 billion within, about 8 years?
Yeah, by 2033. Now, what's really interesting, I think, is where the growth is concentrated within that.
Okay, tell us. What struck you?
Well, the report flags compressors as the fastest growing segment.
Compressors, right. Why is that?
It makes a lot of sense if you think about it. There's the increasing global demand for liquefied natural gas, LNG.
Yes.
That needs huge amounts of compression to liquefy and transport, plus more efficient gas pipelines and also enhanced oil recovery, EOR.
That's squeezing more out of old wells.
Exactly. Often involves injecting gases under pressure. And looking ahead, you've got the rise of hydrogen as an energy source and carbon capture, CCUS.
Right, carbon capture.
All needing advanced compressor tech. So this growth in compressors, it really reflects some major shifts happening in the energy world.
That's a great point about these sort of broader energy context, driving specific equipment needs. You need those powerful compressors for these new energy solutions.
Absolutely.
But what about the more, let's say, established parts of the market? Are they still significant?
Oh, definitely. While compressors are driving the growth, valves remain the dominant product type in terms of overall market share.
Okay. The backbone.
Absolutely the backbone. Their importance, you just can't overstate it. Think about any oil and gas operation, drilling, refining, pipelines. Valves are essential.
Controlling everything.
Controlling flow, pressure, ensuring safety. Pipelines, LNG terminals, petrochemical plants, they're packed with all kinds of valves. They're the unsung heroes, making sure it all works safely and efficiently.
So valves are the reliable workhorse, the backbone, and compressors are the high-growth engine right now.
That's a good way to put it.
Now, let's zoom in a bit. Where is most of this market activity actually happening right now, geographically?
Okay, looking at the regional breakdown for 2025, North America currently has the largest slice of the pie,
Right.
over 37% of global revenue. That's a market size of USD 7,637.36 million.
So over 7.6 billion.
Exactly. But their projected annual growth, the CAGR, is around 3.7%, which is, well, more moderate compared to some other places we'll talk about.
Okay, so North America is the current leader, but maybe not the fastest grower going forward. What's fueling that big share there, particularly within the U.S., Canada, Mexico?
Well, within North America, the U.S. is really the main engine. Its market size is just over USD 6 billion in 2025.
Wow, the lion's share.
Yeah, with about 3.5% growth projected. And that's largely down to ongoing shale oil and gas activity, deep water drilling in the Gulf, big expansions in LNG export facilities, and, constant upgrades at refineries.
Makes sense. What about Canada and Mexico?
Canada's got a market size around USD 916 million, growing a bit faster at 4.5%. That seems linked to more focus on natural gas infrastructure. And Mexico, it's around USD 695 million, growing at 4.2%. So, yeah, established infrastructure plus continued investment keeps North America on top for now.
Right. That gives us a clear picture of North America. How does Europe stack up?
Europe's also a very significant market. It holds over 29% of global revenue in 2025.
Still pretty big.
Oh, yeah. Market size of nearly USD 6 billion, so 5,986 million roughly, and projected growth of 4.3% annually.
Okay. Similar growth to North America, roughly.
A little bit higher, actually, and the drivers here, they're a bit more varied, kind of depends on the specific country and its energy strategy.
Can you give us a couple of key examples? Show that diversity.
Sure. Look at the UK. Market size just over $1 billion US,
Right.
and growth at 5.1%. That's potentially linked to adopting newer, maybe cleaner technologies in their oil and gas ops.
Interesting.
Then Germany, slightly larger market size, about 1.18 billion, growing at 4.5%. That seems driven partly by ongoing investment in natural gas infrastructure. Gas still plays a big role there.
Right. And Russia.
Russia, despite everything, still has a sizable market, USD 927 million or so, with 3.3% projected growth. And we shouldn't forget other key markets like France, Italy, Spain, the Nordics. They all add up to that significant European share.
So moderate growth overall in Europe, but definitely different stories country by country.
Exactly.
Okay, let's shift focus now eastward. Asia Pacific. We heard earlier that's where the highest growth rate is expected.
That's absolutely right. Asia Pacific, or APAC, currently holds about 24% of the global revenue. That's a market size of nearly $5 billion in 2025.
So USD 4,953.96 million.
Precisely. But the key number is that projected CAGR, 7.9% between 2025 and 2033.
Wow, nearly 8%.
Yeah, it's the highest globally by a noticeable margin. It really signals where a lot of the future action in this sector is likely to be concentrated.
What's behind that really impressive growth in APAC? What are the main drivers?
Well, the big story in APAC is infrastructure, especially related to liquefied natural gas, LNG.
Ah, LNG again.
Yes. China, particularly, is undergoing massive expansion in LNG infrastructure. Its market size reflects that, over USD 2 billion.
2,080 million.
And growing at 7.4%. Then there's India, another major growth engine, market size around $500 million.
495 million.
But with a remarkable projected growth of 9.8%.
Almost 10%.
Yeah, partly fueled by growing investment in exploring their shale gas potential. And beyond those two giants, you've got strong growth and contributions from Japan, South Korea, Australia, Singapore, Taiwan, Southeast Asia.
So it's really a combination of rising energy demand across the board and just major infrastructure build-out.
That sums it up perfectly. It's propelling that growth.
Okay, so APAC is definitely the one to watch closely going forward. What about South America and the Middle East? How do they fit in?
South America accounts for a bit over 4% of global revenue. Market size around USD 784 million in 2025, with a pretty decent growth rate projected at 5.9%.
Okay, who are the key players there?
Brazil's a big one. Market size about USD 335 million, growing at 6.5%.
Yeah.
That's driven by its offshore oil and gas exploration.
Right, the pre-salt fields and such.
Exactly. And Argentina is also interesting. Smaller market, about 131 million, but growing faster at 6.8% as they push ahead with developing LNG infrastructure. And then you have Colombia, Peru, Chile adding to the mix.
Okay. And the Middle East, similar size share.
Yes, the Middle East also holds around 4% of global revenue, quite similar to South America. Market size is about USD 825 million in 2025, and the growth rate is strong at 6.5%.
And the big producers there, Saudi Arabia, UAE.
As you'd expect, they're significant players. Saudi Arabia's market is around USD 290 million, growing at 6.8%. The UAE is about USD 170 million, growing slightly faster at 7.0%.
Right.
What's maybe a bit surprising is Turkey showing strong growth at 7.1%, though from a smaller base of USD 66 million, that seems linked to its investment in LNG import terminals.
Strategic location.
Definitely. And Qatar and Egypt are also contributing with their own policies and domestic demand driving growth around 6% or just over.
Got it. And finally, let's just quickly touch on Africa, currently a smaller share you mentioned.
That's right. Africa accounts for about 2.2% of global revenue right now. Market size around USD 454 million in 2025, and projected growth is 5.5%.
Okay. Any specific countries leading there?
South Africa's market is the largest, about USD 160 million, growing at 6.4%, partly due to some increasing LNG projects. Nigeria, around USD 36 million market size, growing at 5.7%, driven by ongoing offshore oil exploration. The rest of Africa contributes too, but obviously from a smaller base.
Okay, so we've toured the globe. Across all these regions, what are the main sort of underlying factors pushing this global market growth?
Well, the report points to a few key drivers. First, and most fundamentally, just the increasing global demand for oil and gas. That leads to more exploration and production, E&P activity.
Right? More drilling, more processing.
Exactly, which naturally means more need for this equipment. Second, ongoing technological advancements and the increasing digitalization of the industry. That improves efficiency, but also drives demand for newer, smarter gear. And third, interestingly, even things like stricter environmental regulations and the wider energy transition are actually boosting the market.
How so? That seems counterintuitive.
Well, you need new or upgraded equipment for cleaner operations, right? And for processing LNG, which many see as a transition fuel, plus all the equipment needed for emerging areas like hydrogen production and carbon capture.
Ah, I see. So the transition itself creates demand for different kinds of equipment or more efficient versions. That's a really insightful point.
It is. It shows the complexity.
What key trends are shaping how this market is actually evolving day to day?
We're seeing a couple of really significant trends. One is that increasing focus on digitalization and adopting what people call smart equipment.
IoT and sensors and things.
Exactly. Internet of Things-based systems for predictive maintenance. Think of equipment that monitors itself, predicts failures.
Avoiding costly shutdowns.
Precisely. Optimizing performance. Automation is also becoming much more common. The other major trend is that clear shift towards more sustainable and energy-efficient solutions.
Right, linking back to the transition.
Yeah, closely linked.
Yeah.
Growing emphasis on applications in LNG, hydrogen, CCUS, all needing highly specialized, highly efficient equipment.
It really sounds like a dynamic space. And competitive, I imagine. Who are the big companies playing in this field?
Oh, it's highly competitive. The report mentions a number of major global players. They're all heavily focused on R&D, technological innovation, strategic partnerships, and increasingly sustainability in what they offer.
Any names we'd recognize?
Definitely. You've got giants like General Electric, Siemens Energy, Mitsubishi Heavy Industries, Schlumberger, Flowserve, Atlas Copco, Baker Hughes, Emerson, Technip FMC. These are the big names developing and supplying a lot of this critical kit.
Right, the usual suspects in heavy industry and energy services. And we even have a couple of specific examples of recent activity.
Yes, the report highlights a couple. For instance, just recently, May 2024, John Crane, they're big in seals and rotating equipment. They secured a 5-year contract in Alberta, Canada. It's for industrial seal support, but importantly, it includes implementing a managed reliability program for things like centrifugal pumps.
Ah, so that predictive maintenance trend in action.
Exactly, ensuring long-term reliability. Another example, from back in October 2022, Senex Energy in Queensland, Australia, announced they were building a new gas compression facility.
More compressors.
Right, directly reflecting those ongoing investments in gas infrastructure, which we said is a key driver, especially for that compressor segment growth.
Okay, great examples. Let's try and bring all of this together then. For someone listening, what are the absolute key takeaways from this deep dive?
I think the main things to remember are, first, just the sheer size and the significant projected growth of this market. Over 20 billion now, heading towards 31 billion by 2033.
It's huge.
It really is. Second, the regional variations, North America leads now, but APAC has that standout high growth potential.
Right, nearly 8%.
Third, within the products, remember, valves are dominant overall, but compressors are the fastest growing segment, really tied into LNG and those energy transition technologies.
Yeah.
And finally, the drivers, it's not just basic demand, but also tech advancements, digitalization, and even environmental pressures and the energy transition itself pushing things forward.
So understanding these dynamics, it really gives you a valuable window into the energy sector, doesn't it?
Yeah.
But also broader trends in tech and the global economy.
Absolutely. Whether your interest is business, technology, global affairs, this sector touches on a lot.
Which leads us to maybe a final thought for you, the listener, to ponder.
As the world keeps grappling with this dual challenge, needing more energy, but also needing it to be more sustainable, how do you see innovation in this kind of essential equipment truly reshaping the future of oil and gas?
Yeah, what new breakthroughs or applications might emerge from that pressure?
And also, thinking about those different growth rates, we saw APAC booming, Europe more moderate. Beyond just energy demand, what other geopolitical factors, trade winds, policy shifts, might further influence where this vital equipment market heads in the coming years?
Definitely some compelling questions to chew on. A lot more complex than just pipes and pumps.
Or more.